For years, we've all had the same advice drilled into us. Save, save, save. Build this massive emergency fund. But what if I told you that keeping too much cash parked in your bank account is actually a trap? Seriously, a trap that's quietly making you poorer with every single day that goes by. Okay, let's get into it. It's a bit of a provocative question, right? Because we look at that balance and we see security, we see a safety net. But that cozy feeling of safety, well, it might be costing you an absolute fortune in the long run. Let's dig into how your best intentions could actually be sabotaging your financial future. This quote really just hits the nail on the head. The money you've worked so hard for, it isn't just sitting there patiently waiting for you. It's actually losing its power. We're talking about inflation, that silent thief that makes the cash in your wallet worth less tomorrow than it is today. It's all about understanding that the real risk is doing nothing at all. Now, let's be crystal clear. I am not, and I repeat, not saying you shouldn't have an emergency fund. They are absolutely essential. But there's a very fine line where that fund stops being a life raft and starts becoming a financial anchor, weighing you down. Think of your emergency fund as a financial circuit breaker. That's its job. It's not your life savings. It is a very specific tool for a very specific purpose. All you need to do is calculate your absolute bare bones expenses. We're talking rent, food, bills, and aim for 3 to 6 months worth. Once you hit that number, boom, mission accomplished. Anything more than that, and you're stepping right into the trap. So, what's the first part of this trap? It's the simple fact that your cash is probably the laziest employee you will ever hire. I mean it. It just sits there, kicking its feet up, doing absolutely nothing for you. Just think about this for a second. You put in the sweat, the stress, all those long hours to earn that money. And what do you get in return? Your cash just sits there, motionless. And actually, it's worse than that. It's shrinking. Every single year, inflation is nibbling away at its value, meaning it can buy you less and less. So you're working harder, while your money is, well, it's not working at all. The financial cost is one thing, but the second part of the trap is all in your head. It's psychological. It's about how having all that cash just sitting there where you can see it actually tricks your brain. And trust me on this, I have totally fallen for this one myself. Picture it. You log into your banking app and you see a nice, big, round number staring back at you. Say, 15,000 pounds, just sitting in your current account. What's the first thing your brain screams? Wow, I'm rich. I've got loads of money. It feels fantastic, doesn't it? But it's also incredibly misleading. Because that money feels so real and so available, your brain immediately starts justifying little expenses. All of a sudden, buying those new shoes seems perfectly fine. Grabbing dinner out instead of cooking? Oh, why not? That big balance creates this false sense of wealth, and it encourages you to spend money that was never really for fun stuff. It was your just-in-case fund, or just money you hadn't put to work yet. And here's something else a lot of people forget. In the UK, the Financial Services Compensation Scheme only protects your cash up to £85,000 per banking license. Most countries have a similar setup, but they all have limits. So keeping huge sums of cash in one place means you're actually taking on this hidden risk for, you guessed it, absolutely zero reward. Okay, so that's the problem. How in the world do we escape this trap? Well, the solution is beautifully simple. It's a little framework called the 5-year rule, and I promise you it will completely change how you think about your money. Think of this rule as your new best friend for making money decisions. It creates this really clear dividing line, giving every single pound you own a specific job to do. It's all about separating the money you're going to need soon from the money you won't. So here's how it works, and it's really, really simple. Any money you need for a specific goal in the next 5 years, think a house deposit, a wedding, a new car, that money belongs in a high-yield savings account. It's safe, it's accessible, and it earns you a little bit of interest. But any money at all beyond your emergency fund that you don't need for at least 5 years, that money needs to be invested. That's how you protect its value and give it a real chance to grow. Knowing the rule is great, but actually doing it is what counts. And the secret here isn't about having superhuman willpower. Nope, it's about building a system that runs on autopilot, making the smart choice the easy choice. Here's the system in 3 simple steps. First, open a tax-friendly investment account. In the UK, the go-to is a stocks and shares ISA. Second, pick a simple, globally diversified index fund. Just think of this like buying a tiny slice of hundreds of the biggest companies all over the world. You're not putting all your eggs in one basket. And third, this is the magic step. Automate it. Set up a direct debit to whisk that money away on payday before you even see it. And why use an account like an ISA? Oh, because it's an incredibly powerful tool. You can invest up to £20,000 a year, and any growth or income you make from it is completely tax-free. You should definitely look for similar accounts where you live, like a Roth IRA or a 401k in the US. It's just a fantastic way to let your money work even harder for you. And that's the psychological genius of automating it. It's literally out of sight, out of mind. When the money moves before you even have a chance to think about spending it, the temptation is just gone. You've broken the cycle. Your long-term wealth is just quietly building itself in the background. So let's leave it with this. Every pound you own that isn't part of your essential emergency fund is standing at a crossroads. It can either carry on being that lazy employee just sitting around losing value every single day, or you can give it a new job. You can turn it into a powerful engine for your future growth. The choice is yours.